keep telling you that in this market, you want more exposure to all things healthcare, one of the few areas that can continue having robust growth, regardless of whether or not the Fed stomps on our economy with an ill-advised rate hike. You've heard us talk steadily about these healthy stocks. Tonight, I want to take you further up the healthcare food chain with a high-quality life sciences company that has languished so far this year. I'm talking about Thermo Fisher Scientific, TMO, the #1 player in the life sciences tools business. Thermo Fisher provides laboratory customers with everything they need to conduct real science. They also have a substantial diagnostic division, a strong environmental and food safety business, and a terrific genomics platform, courtesy of the company's transformational $13.6 billion acquisition of Life Technologies, which closed early last year. Think of Thermo Fisher as an arms dealer for biotech and pharmaceutical companies. Thermo Fisher reported a very good quarter in early April, even as the company took a real hit from the strong dollar, because they have a substantial overseas business. Now this company has a long history of making smart acquisitions, and they've budgeted $10 billion for bolt-on deals through 2018, which could really bolster the growth here. And given that the stock is only up a little more than 2% for 2015, I think there could be a lot of untapped upside. So don't take it from me, though. Let's check in with Mark Casper, the president and CEO of Thermo Fisher Scientific, find out more about how his company is doing and where it is headed. Mr. Casper, welcome back to Mad Money. Good to see you, sir.
Jim, thank you.
Thank you.
Thank
you. First, I have to tell you, because I was on the call and I thought it was really great. Were you surprised that people were so hung up on currency when a lot of other companies have really been given a pass on currency?
Yeah, from the currency perspective, I think all of the multinationals are facing it. But we're navigating it effectively. In fact, this year we should have 4 to 6% earnings growth despite some currency headwinds. So I think it's something that will pass over time.
Yeah, I mean, I've heard people say 4 to 6% constant currency, and then it's actually -2, -3. I mean, yours is actually going to be positive.
It will this year.
Now, there was an issue with the Japanese contract. Again, one guy said on the conference call, well, hold it, am I missing something? Couldn't be that important. But in reality, there is a lot of Japanese business. Is that now settled down to where the bills can be, the orders can be put in, the bills will be paid?
Yeah, as a company, half of our business is global.
Right.
And Japan, kind of a top 5 market. In the first quarter, the government actually didn't pass a budget, so it actually slipped into April. So momentum is actually rebuilt in Japan, but led for a little slower start. The good news is because of our global footprint, we've had good growth and have a good prospect for the year.
A lot of companies have seen a slowdown in the so-called acceleration of China. Your Chinese business is actually getting stronger year over year.
It is. In fact, China had very strong growth in the first quarter, and we've built a very strong business. As we've talked in the past, over $1 billion of revenue in China, second largest market after the United States. We use our 4,000 colleagues to really create a great customer experience, and it's been an area that we've grown about 30% a year on average over the last 5 years, and we're looking for reasonable growth again going into the future.
How much of that is they're doing pioneering work, and how much of it is just because they feel like they've neglected their healthcare system?
Yeah, for us, we're very well aligned in China with the government priorities of healthcare, food safety, and air monitoring for environmental protection. So when you look at the Chinese economy, it has its ebbs and flows, but the technologies we provide for government there is absolutely critical to make sure that society continues to progress.
I saw that you won an award in a magazine. I went to the magazine to try to learn what you had won, and frankly, it's over my head. But can you tell me how much of your product didn't exist 4 years ago that exists now?
Yeah, in terms of our vitality, about 20% of our revenue would be from products that would have been launched in the last 4 years. So we spend more on R&D than anybody in our industry, about $700 million, and it is one of our key enablers of growth for us.
Now, when I looked at your highly complementary business segments, and there's some great stuff in your deck, serving customers in large and growing markets, I was trying to figure out how much, when I see biotech companies come public, should I try to extrapolate and think that could be Thermo Fisher Scientific with some of the money that they raise?
Yeah, so every time we're in clearly a very strong biotech funding environment.
Right.
And we equip their labs. We start from right at the beginning all the way through the launch of a drug in terms of our technologies. We would be their largest supplier, and if a company is successful, we could have relationships that can be $50 million or more over time with our biotech customers.
Do I have to worry that it seems like there's just a shrinkage worldwide for academic and government, that the governments are cheap around the world, academics always seems cut back these days, or is that still pretty consistent? I just don't. I feel the pain that I'm seeing is not that bad.
So Jim, actually, academic and government has improved over the last year.
Okay.
If you take a long-term perspective, it's a 2 to 3% growth market for us, and we're actually returning back to that kind of growth again. So after sequestration and some of the things of the past, those are behind us. And actually, the U.S. has been a good market. China continues to improve from a growth perspective. So academic and government is one of the areas that we feel okay about.
You generate a huge amount of cash because the debt pay downs you guys money up rather quickly, don't you?
Yeah, from a cash flow perspective, we generate about $2.5 billion in cash, and we deploy it in a very disciplined way to create shareholder value. A balance of returning capital to our shareholders, buybacks, dividends, but also very aggressive on the M&A front. In fact, when we had our Analyst Day a couple weeks ago, we talked about $15 billion of money to deploy and capital to deploy over the next 3 years, about $10 billion probably towards the M&A side of that. So lots of opportunities to deploy capital and create shareholder value.
Are you still seeing actual competition, or are there some situations where there's just kind of nobody really going up against you anymore?
From the M&A landscape, we are in a huge business, $100 billion industry. Even as the clear industry leader, we only have $17 billion in revenue. So lots of small players out there. Right. And we're very selective of what we buy, and we see great opportunities for growth. We use our strict criteria and make sure we have very good returns for our shareholders, and we see great opportunities to deploy capital to build out the company further. My
Travel Trust owns it just because we kind of feel like it's not. It's been a long time since the stock's rested, and then it starts taking off again. I think that's going to happen again soon. That's Mark Casper, President and CEO of Thermo Fisher Scientific, the leader in instrumentation in probably one of the great growth areas of our time, healthcare. Mad Money's back in. Right. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.